Welcome to Insight. I'm Shalini Verma. In this show today, a discussion on the developments around the possible rollout of the GST in July. The goods and services tax is seen as India's biggest tax reform since independence. The GST Council has been having regular meetings to build consensus among states on various aspects of the tax reform. The 14th round of GST Council meet is taking place in Srinagar. On the first day of the meeting yesterday, the Council approved rates for about 1,200 items and the rules for the new tax regime. According to the decision taken yesterday, 7% of the items, including food grains, will be exempted, while 14% items have been put in the lowest tax bracket of 5%. Another 17% items are in 12% tax bracket, 43% items in 18% tax slab, and only 19% of goods fall in the top tax bracket of 28%, which includes small cars, television, refrigerators, washing machines, and other white products. Broadly speaking, as many as 81% of the items will now attract 18% or less of the GST. The GST Council, which is the apex decision-making body for the new tax, has backed the July 1st deadline for rolling out the unified indirect tax. The Council, during the first day of its 14th meeting, approved all 9 rules for the rollout of the new indirect tax regime. The 9 rules pertain to composition, evaluation, transition, input tax credit, invoice, payment, refund, registration, and return. Items such as cereals, which were taxed earlier at 5%, will now be zero-rated. A host of other daily consumption items such as milk, fruits, vegetables, jaggery, food grains have been exempted from tax. Coffee, sugar, tea and edible oil will attract a lower GST rate of 5%. About 60% of the items will be in either the 12% or the 18% tax brackets. Capital goods, a key asset for the manufacturing sector, will be taxed at 18%. In its meeting today, the Council is expected to discuss the rates on a few items of relevance to specific states. These include 6 categories of gold, jewellery, beedies, packaged food, clothing and footwear. Along with this, the rates for services are also likely to be fixed today. So it is expected that the rates for packaged and branded food will be decided today, along with that on services. The approval of the draft rules brings more clarity on the implementation of the GST. So some key questions we delve into are that what are the key takeaways from the GST meet? How will the GST rate structure affect your household budget? What will be its impact on industry? Which products will become cheaper and which ones will become pricey? And what can be expected from the meeting today? And to talk more on this, I'm joined by Mr. Gopal Kumar Kedia. He's a chartered accountant. Welcome to the program, Mr. Kedia. Let's try and first understand what kind of a picture does the tax rates now, the decision which has been taken by the GST Council, what kind of a structure does it really present of the GST?
Salini ji, you know, this is the biggest rollout of the indirect tax system of India. Whatever rules act has been framed, ultimately things has to be converted into the rates. We know there are 4 rates. So all the items which were being governed by the existing erstwhile indirect tax regimes, majority of them were excise, service tax, VAT, GST. So all the items has been converted into 4 rates. Emphasis was given that the rates should be as near as to the existing rates which were, and if the rates fall in between, we are having 4 rates in between, so care has been taken to keep the interest of the revenue that the highest rate should be taken for that. In yesterday's meeting, in the majority of items, as you told and we know, in 1,200 items, rates has been decided. In few items, rates is yet to be decided, and as this was the 14th meeting, so decision has to be taken today.
So, you know, what is the expectation like? Is it that in case those items are, the rates on those specific categories, there are supposedly 6 categories, which include cigarettes and beedies and also footwear and other sectors, and that on services, if that is not taken today, would that mean that there will be another round of consultation? Or let's say if it is taken today, then would it mean that the consultation round is over after this?
You see, yesterday Finance Minister specifically told we will try to cover those items, remaining items in today's meeting. But in case if there is no consensus, so one more round may be decided. As we know, these are the seen items, basically tobacco, beerage, these are the seen items, and since maximum rate has been decided 28%, so they have been penalized by way of imposing cess.
Right.
So cess is like
1%,
135%.
right.
Although it is decided that cess will not be more than 15%.
Right.
In the major item, but in case of seen items, this is much above to
Right.
keep the pace in the society.
And these are the items, you call them the sin items, and they are the ones for which the states particularly had been demanding that there should be some sort of a room available to the states too, because this means gold jewelry, beads, packaged food, which is one of the important commodity here, clothing, footwear, and of course the services.
Yeah.
So what is there for states here? I mean, how do you look at the whole exercise of building up the consensus and reaching at this stage where we are left with the 6 categories which states really wanted some sort of space there in going ahead with it?
State needs revenue, and these are the items which are the major source of revenue for the states. You see, Salini, there are certain localized items like fisheries. Fisheries is specifically found in the sea states. So the states will try that these items should be exempted from the GST net.
Right.
And the seen items, the surcharge should be kept on the lower side. They will try, but we have to see the overall impact of the GST. Every interest of the every state has to be taken in mind. So some consensus has to be there, and we have seen already 14th round. This is the 14th round, and we are hopeful things will be settled in today's meeting, because 1st July has been finalized.
Right.
Everyone is ready. Even JK Finance Minister has told now we will pass the act to be a part in the national structure, national federalism. So I am hopeful in today's meeting things will be finalized. Yeah.
Yeah, and how do you look at its impact on the household budget, which perhaps is the key thing which everybody is waiting to see? After all, you know, there had been reports suggesting that GST, what kind of structure would GST be offering, especially with regard to the consumer goods, the important things that you use in your day-to-day life. And now we know that the food grains also have been completely exempted.
Yes.
You know, the minimum % of taxes also has been, now they are at a 0 rate slab. So how do you look at that part?
You see, in most of the cases, the consumer will be beneficiaries. Middle class, upper middle class will be beneficiaries, because tax rates are going to be on the lower, because cost cutting effects will be eliminated. In the upper segments, luxury segments, like you see the big sedan cars, like the rates has to be, the earlier rates was 42%, 43%, including excise and VAT. So now the maximum rate is 28%.
28%.
And we impose surcharge 15%, so 32.5% is going, so that is getting beneficial for them. But for the lower segment of the cars, because in the lower segment, the earlier rate was 12 and 12 around 25%, and now it's going to be 28%. So
plus 1%.
Yeah, so this will be to some extent plus 1%.
A little costly. Yeah.
So to some extent this will be costly. But so far middle class and lower class is concerned, most of the things I can say 99% of the things are going to be cheaper, because the impact, ultimate impact, we have to see the cascading effects. One thing I will tell you, Salini ji, like in the capital goods items, we have kept 28%. There was one item, plywood industries, I will tell you specifically, the earlier rate was around 12.5% was the excise, and if it was an interstate 2% CST, or it was a local 5% or 10% depending, 12.5% depending on the state. Now it has been put in the bracket of 28%.
You see, there are conflicting reports on that. There are some reports which suggest that it is at 28%, the others who suggest that it has been brought down to 18%. We will continue the discussion on that part, as well as the impact of the rates so far on largely on a common man and on the household budget. More on that after this very short break in Inside. Please. Welcome back. In Inside today, we are talking about the GST Council meet, which is happening in Srinagar. Yesterday, the council had decided on the tax rates on 1,211 items of goods, and this includes the 7% items, as we know, have been exempted. 14% will be falling in the slab of 5%, 17% items will be falling in the slab of 12%, 43% items in the 18% slab, and 19% items in the 28% slab. And to discuss more on this, I'm joined by Mr. Gopal Krishna Agarwal, who is spokesperson BJP, and I'm also joined by Mr. Sumit Dutt Majumdar, who's former chairman, Central Board of Excise and Customs. Welcome to the program. Well, I'd begin the discussion with you, Gopalji. The fact that there's a lot of clarity which is emerging now, but let's look at the other side of this meet too. The fact that this meeting was happening or is happening in Srinagar. What is basically the objective behind holding it in Srinagar? Does it have a larger message?
Yeah, definitely. The government wants to give a message that Srinagar, Kashmir, Jammu Kashmir is an important concern of the government. There is a deteriorating situation there, and government has said committed itself to clear it and bring it to the better positions. So that's one of the important thing, and it is other concern is that it is also one of the important state. So ultimately, there is not very big message is not there, but simply is
the fact that it's happening there. It said that it's also going to give some sort of a boost to the tourism sector, and there are of course related aspects. But how do you look at the fact that states had come up with their own demands around the GST? For example, a state like Jammu and Kashmir had said that the handloom and the handicraft should be in a 0% category. There are other states which have put up their similar demands. Now, how do you look at those aspects of the entire, of actually approaching the GST with consensus? I mean, how do you look at that part?
This is the biggest achievement that our government has, this is first time where the sovereign power of the state, there was a difference. Major problem with the excise and other things, sale tax, service, was that the jurisdiction was divided between state and the center.
Right.
And the first time in the GST Council, the state have delegated their power of sovereignty of taxing goods and service, etc., to the GST Council, and the center has also delegated its power. And from that, this new law has come out. So there are conflicting demands, but ultimately that everybody has come on board. Now the GST, there is a consensus, demands have been met, there has been a negotiation, many things have been relaxation from the center side also. That service tax, which was a exclusive domain of the center, now the center is ready to share it with the state. So ultimately the whole process is talking of a cooperative federalism. That's very important. And the conflict in the tax at present tax law was, there was conflict of the state government, the center, what goods, what taxes will be taken by the states, what will be taken by the center. All these conflicts have now come to one platform and are being resolved at a good level. So this is
This
very
is the
important,
14th
and we will
round
move
of
forward.
this discussions, the council meet, which is really happening. And as you said, that the GST council in itself is a very unique experiment, perhaps the first of its kind that we see in this country, where we have this kind of, a platform where the states are coming together and the center is also there, and there is a process of building up some sort of a consensus. But how do you look at, sir, the grand experiment that India is doing in the form of GST? And do you think that the rates which have now been announced, are they very very feasible given the context, the background of bringing in the GST and the huge expectations that people have from this tax regime?
Yes, first of all, I must say that the GST Council must be complimented for living up to the expectation of the people. As you have seen, they have broadly gone by what they promised. When they said that the rates will be exempted, then there will be a 5%,
right.
12, 18. And the idea was that 5% exempt goods should be for the consumption by the very poor people, 5% will be of the poor people, 12% will be the common people use, 18% will be slightly better off class of people, and 28% for for the demerit goods and also for the rich people.
Right.
And if you see the list up till now, whatever has come, I think broadly it follows that. So I'd say that it has come in expected lines, and this will definitely have an impact in the fall in price. Even some of the items where the rates are slightly higher than the present one, as Finance Minister has pointed out, I must clarify here because that point has not been talked about much. GST by itself, the scheme is like that. There are the three elements which will bring down the price. One is that the cascading will be almost nil in the GST. Today, every item you buy, there is a hidden tax of which we are not aware.
Which you are not aware of.
We are not aware. We are paying hidden taxes, which is tax on tax.
Right.
So that will go on GST. That will, it itself will bring down the price. Secondly, today taxpayer is going to 4 or 5 agencies.
Right.
Central Excise Officer to pay the Central Excise Duty, the service tax officers for service tax, then your state VAT. If it's a luxury item, then the commercial tax, entry tax, if the goods are coming from other. Now all these things, there will be only 2 agencies, that is central government and the state government, the central GST authority and state GST authority. Even that has been simplified because of the use of the technology. Now there will be a GST net. In that portal, there will be one front end and the other is the back end. Back end there will be 2 administrators. And you don't have to file one, you have to file only one application for registration, one payment document, so it will get split.
Yeah.
So what will happen is that at each point there is compliance cost. And when I say compliance cost, there is both visible and invisible costs. Everything goes into the price of the goods. Now all those things will come down now. Because there will be, and I am telling you, because of the use of the technology,
right,
the contact between the taxpayer and taxman will be minimum. And I would see that from my experience, that only about 7 to 10% of the total taxpayers who had some problem with the tax authorities. So beyond that, these 92, 93%, the taxpayer will not know who is their tax officer, because everything will be done through technology sitting from his office. And that will be a very good thing. It will bring down the another element which will bring down the price. Third point is that all your entry tax and the road check, that's why one point was really bothering me, and I'm told that they are having a relook at it, that is way bill. Because this would have brought back again this old system of cross check, this check post and all. Now today, goods coming from your Coimbatore to Gurgaon, it takes about 15 to 20 days. Now once GST comes, we expect that since there will be no entry tax, there will be no state barrier unless you have an information, specific information, intelligence.
Right.
Otherwise, no routine check. So it should come in just about 10 to 12 days.
So
maximum.
there would be simplification of services, and there would be, more easier
much
atmosphere.
easier thing. The ease of doing business will be much better. So these 3 elements will bring down the price. So automatically, apart from the rates of duty.
Right.
So I see that some people are saying, oh, when GST comes, there is inflation. I don't think it will happen.
One of the key things about the industries are that they are cheering it. There is, because since the capital goods, their rate has been brought down to 18%. And this is something which is seen as a key for the power sector in particular and for the others. So how do you look at that part? Does it really bring more transparency into the system? Of course, there are no hidden taxes now. One knows it for sure that this is the percentage of tax that one is supposed to pay. I mean, I'm speaking from the point of view of industries as well.
Yeah, Salini, one study has been done, and in which it has been observed that if the cost of the goods at the initial level is reduced by 2%, the ultimate profit will raise to 20% to the businessman. Reducing cost of goods means a lot of business. The ease of doing business will increase. The cost of doing the business will less. People with smaller capital can do more business. So employment will be generated. More and more employment will be generated, because self businessmen will start there doing own business. What I was observing since last 20 years, the cost of doing business has increased substantially. The person who were having 1 lakh rupees as a capital and he was doing the business, so doing the same business, the cost has been increased to 5 lakhs, 6 lakhs, 7 lakhs. So he went into employment. So there was burden on the job market. So with this invention, this GST coming live, lot of things are going to change in the society. The general lifestyle of the society will also change. So far industry is concerned, the industrial production will boost, because consumption will increase, since the ultimate cost of goods will reduce. So everyone is going to cherish this GST impact.
Yeah, but one of the key things, Mr. Agarwal, I'd like to ask you, have we overcome that question of why do we have a multiple rate structure when GST was supposed to have only a uniform or one rate structure? Have we, have we left those questions far behind us now?
No, the question is that we should understand why this has been done. Earlier, before the GST regime was brought into India, we had around 18 to 20 taxes, and many of the taxes were from the state government, many were like octroi, sale tax, etc. So many of taxes were from the state government and many taxes were from the central government. All those indirect taxes have been included into one GST. The question was, then the government main objective was that sometimes GST may become inflationary if there is a single taxation. The government wanted to keep the essential commodities, food items at a lower slab. That was one of the objectives which was required, so that a common man or poor man in the country can have affordable commodity prices at affordable commodities, food items, milk, etc. Then there was a question of keeping the revenue neutral taxation, because if indirect taxes, the total tax center has committed to the state government that any revenue loss will be compensated by the center for the 5 years, and every year 14% increase will be considered with the base year as last year. So, to keep that effect into perspective, to implement that and at the same time keep the essential commodities at a lower rate, this structure of 4 different slabs had to be brought in, and that is the, I think that's the purpose which government is fulfilling, that the essential commodities like milk items, food items, cereals, vegetables, those commodities are taxed at a lower rate and are available at a cheaper rate. That is one of the objective, and at the same time luxury goods like alcohol, luxury cars, etc. are taxed at a higher rate. At the basic culture of the tax is pay as you can afford. That is also a important
But that may
aspect.
not be the same thing about the automobile sector in particular, where the small cars, the petrol car, the diesel cars are probably going to be costly, are going to get a little more pricey than where they stand today.
No, but that has also been kept at 18% and a cess of 3%, I think.
28% plus 1%
28
and 20%
plus
plus
3% of cess. So I think there is some adjustment. Government earlier they were taxed at 29%. So now the government has tried to keep the not increase the tax on item wise basis, and at the same time has tried to reduce taxes on many of the commodities which were taxed at 18, they have brought to 12%. Many of the commodities like cereals, etc., earlier which were taxed at 11% have been brought to 5%.
Yeah.
And even
Cereals
milk,
almost
etc., have been
it's
kept at a zero tax.
Zero rate tax.
So,
That's true.
ultimately government has been able to successfully implement tax policy for the benefit of the common man and the poor people, at the same time keep the revenue of the government, state as well as center intact, so that the resources for the government to implement many of the schemes which are also for social security, infrastructure. If the government reduces taxes drastically overall in absolute terms, then government will not have resources to build infrastructure.
You know, one of the key things here is that the list of the exemptions, that appears to be substantially trimmed, and that's something which the finance minister also had been talking about, that don't try and increase that list of exemptions, keep it as minimum as possible. So, you know, has the government been able to address that part very, very smartly through the rate structure?
Let me tell you now what is the current situation. Currently, state VAT exemptions are about 98, one or two items here and there. And each state has their own special item for that particular region, of local importance. And whereas excise exemptions are more than 350, 380. So, in the GST regime, the exemption list will be common. So, the negotiation is going on for last 4 or 5 years, that how to come to a common list. So, naturally certain things we have to continue with the exemptions. At the same time, we can't bring down to 98 straight away. Like for example, you can't think of not giving exemption to the power sector.
That's true.
The power is very much needed for our development.
Yes.
Like that, there are many items. So, the negotiation is going. That's why it is taking time. They have not yet finalized the exemption.
Right.
Last minute, yesterday, I saw that the puja materials also should be there.
Yes.
Some state has said
Uttar Pradesh
something
has
else.
in fact asked for cotton yarn, silk.
Cotton yarn.
whatnot,
No, it's all right. But all the things is that it may be asked by one particular state, but it will be applicable for all states. It's no longer a VAT regime. It's a GST regime. So with a lot of thought it has to be done. And when I talk about puja materials, one more I think it came to my mind, that it must be clarified, otherwise it will be a point of conflict between taxpayer and taxman. Because puja material is a very vague term. You have to specify, namely which 1, 2, 3,
products,
4.
okay, which
Otherwise there
items?
will be every time they will go. So all items should be clarified like that. So that, you know, we have seen the classification is not an issue these days thanks to the harmonized system of nomenclature, HSN nomenclature. But then it appears all the problems appear because of notifications, the exemption notifications. So that's why they are taking a little time, but they will be able to do it, and I think quite reasonably it will be done.
And how do you look at the part that the fact that Mr. Gopal Krishna Agarwal was also talking about, that the revenue of the states will remain intact from now on? Of course, this provides there are indeed a lot of other aspects too related to the implementation of the GST. We will talk about that too. But you know, broadly speaking, do the state get more? Do they get more empowered with the implementation of GST? Does that really happen?
I'll tell you. When I talk about the more empowerment, one more element I want to bring it. There is an element of equity in GST, in the GST scheme. Now, what is happening in our country today? We have a few states that are highly developed industrially. You take Gujarat, Maharashtra, Karnataka, Tamil Nadu, Delhi, part of Haryana.
Right.
And you have states like Orissa, Bihar, Jharkhand, Bengal even now, northeastern states, and their industry not developed
really
at all.
taking off,
But those are the consumption states. The population is high there. So what will happen now, because of the GST scheme, it's being a destination-based consumption tax, whenever there is interstate movement of goods or services, the state share will go to those states which are not. And we expect those states, now they cannot say the center is not giving us money. Now the states will have the own money, and we expect them to spend it on the infrastructure, road connectivity. Why industry doesn't go there? Because there is no road connectivity, or there is no power sector, and that's why they choose some areas which are agriculturally very prosperous. Why do you go to the agricultural land where there are 3 crops? Go to I have been in West Bengal for a long time. Why not have it in Purulia, Bankura, which is, there is so much of land is there, fallen land, but because there is no road connectivity. So only thing is that this is up to our political masters to ensure that they don't fritter away that money in other small things, distributing to the people.
The states, that is.
The states I'm talking about. They should spend it on the hardware, automatically industry will go. Once the industry go, the manufacture will improve like anything. Right now you see our GDP is so high mainly because of service sector.
Right.
60% is service. Manufacture I think is only about 12.5 or so.
Right.
Our Prime
and
Minister
you've set
has,
very ambitious
Prime Minister,
targets.
if you recall, after he came, the first call that he had given is that make in India.
Right.
Because manufacturing is the thing, and his target I think is 22% by 2020. So if we have to have that, you must have manufacturing everywhere. And once you have manufacture, you have your employment. You add to the GDP, state GDP, and another thing which Mr. Kedia was mentioning, that many other social issues, like why the migration takes place.
Right.
The migration will automatically stop. People don't like to go from their own place to other place. They go because there is no job in their place. So GST is not just a tax reform. It is
it reforms the whole economy, I think.
And one more point I would like to point here, I mean, just to add to what Gopal Krishna ji had said, I fully support what he said. I want to add one more thing. You see, single rate is not possible in a country like India. The famous public finance man and expert in VAT, Professor Richard Bird in Canada, a very elderly person, he says that there is no VAT, there are VATs and VATs. Each country must have VAT according to their own socio-economic political situation. Now, can you think in India, you have a rate where a dhoti and a suit will attract the same rate of duty? It's not possible.
It's not possible.
So
what about the experiments of a similar kind, GST, which has been experimented in other countries? How is it different?
Yes,
from
I tell you now.
Yeah.
France. France is the country which had VAT first. They call it VAT, but it's the same thing, VAT or GST. The modern name is GST. They still call it VAT, the EU countries. Now, France had brought VAT in 1954. This first country. If we see the website, how many rates? There are 5 rates, because you see, all they have a socialistic angle, because they have to serve to the poorer section. So they have, starting with 20, there is a standard rate, then 12.5, 11.5, 10, like that, you know, it goes on till 5. 2.5 is the lowest rate, and then exempt goods. UK also 2 rates, and even UK. They have excise separately for alcohol, for petrol, motor car. So it's not that what India is doing. I don't know why people are talking that India is doing something very bad. It's not bad. It's the best possible under the circumstances.
Especially when you have such divides and such differences even among consuming, producing states and there are so many other issues also.
And the only thing, the slogan that we have given, that one tax, one country, I would just like to add that one commodity, one tax, one country. Because there is one commodity, today the same commodity is charged differently because of different VAT rate. That will not be there.
We'll take a very quick break now in Insight, and stay tuned for more on the other side of this break, where we also explore the other challenges that GST may face in its implementation. Welcome back. You're watching Insight. The country moved a step forward in adopting its biggest tax reform since independence, the Goods and Services Tax, with the GST Council now fixing the rates for over 1,200 items. The meeting is still going on. There is going to be a decision now on the charges and the tax rates which are going to be set for the services. Most consumer goods so far and the life-saving drugs are likely to be cheaper after the rates which have been announced yesterday. This meeting is happening in Srinagar. This is the 14th round of the GST Council meet. Let's take this discussion forward and understand as to what these rules in particular do. Mr. Majumdar, I'd like to ask you again this question. The GST Council has cleared 8 rules to push the tax reforms. Now, one would like to understand what do these rules basically do to change the way things are?
It's like this. The act is an act of parliament or legislative assembly. The GST and SGST will be done. Now the act gives the overall power, and then broadly that says that what will be the format and all. But the nuts and bolts of procedure and other, wherever there is some doubt, that power is delegated to the minister. and then he makes the rules. So these rules will clarify all the doubts that we have. So one can say that it is complementary to the Act, but it is always subservient to the Act. It cannot go beyond the Act. So that is why the rules are very important, and out of 9 rules, 8 they have, actually 5 rules they have finalized about 15 days back. That they have formally cleared today. Those are the basic business processes for collection of GST. One is on registration. The first work is on registration, so that the taxman knows who are their taxpayers. Then second is the self-assessment and payment. Because the trust the trade, principle is the trust the trade, they do their own self-assessment, they pay. But then there has to be a check on that, because there are black sheep in every strata of the society, including trade and industry. It's a very minuscule percentage. But for that, the return, one is to file the return.
Okay.
So returns will be taken up by the tax administrators for the scrutiny, audit, and if there is any question, that's why I said from my experience, I can tell you 90 to 93% of the transactions will just go through the system without any query, without anything.
Mr. Kedia, how do you look at that part? The fact that, before, during the break, you were in fact talking about how it's going to have an impact even on the black economy. Can you please throw some more light on that?
Salini ji, what is happening in the system? There is a chain. The goods being manufactured at one place and ultimately going to the consumer. So it will pass through a lot of chains. What was happening earlier? People were purchasing the goods without paying taxes, selling the goods without paying taxes. They were not in income tax bracket, they were not in direct or indirect tax bracket. So parallel economy was running simultaneously. Now in the whole system, because the GST laws has been taking care of the host of things, the thing which I told you during the break, kahin pe nigahein, kahin pe nisana. So GST will take care of the parallel economy itself. If the goods are being manufactured, if the manufacturer is charging instead of excise duty, service tax, GST now, the goods will go to some other persons. The other person will take the benefit, input tax credit, ITC, he will take the input tax credit, then he will sell to some other persons, he will take ITC. For ITC, income tax, input tax credit, there is a system, because person has to file the returns. The earlier person has to file the returns, only then the next person will take the benefit of that. So this is the chain. So in this chain, even if one person is defaulting, the subsequent businessmen, subsequent persons will not take the benefit. And there is a system, there is a system in this GST laws that the businessmen will be categorized, category 1, A, B, C. And if people will mark them category C, so people will not purchase goods from the persons, because everything will be on the net.
All right.
So that person will be penalized in the system itself. People will not purchase because they know that person will not deposit the tax.
Okay.
So in this way, parallel economy will slowly and gradually will go to its own death.
Okay, so it means that there's going to be more transparency than what we had seen in the past system. But how do you look at the main targets and the agenda for today's meeting, Mr. Agarwal? The fact that there's going to be more focus on the 6 categories of the products, which includes gold jewelry and cigarettes and BDs and the others, and the fact that there's going to be also a decision on services. Now, what kind of expectations can one have from today's agenda?
I think one important consideration today is the service tax, because service tax earlier was with the center, and it was a quite simplified procedure under which service tax was operating, and people who were paying services were in a simple ecosystem that they were working. Now with the state also charging service tax, that dual concept of chargeability has come on service tax. This is one of the important concession which the center has given to the states for bringing them together in the GST model. They can now have a share in the service tax. That is a major concession under the federal cooperative federalism that the center has given. So there was concern how it will be implemented. Ultimately, that all thing has to be whether there will be two rates for service tax or a single rate, what will be the rate in service tax, and how it will affect the industry. These are the questions, complicated questions, which are being deliberated today, and ultimately we will have a roadmap clear how the service tax industry will move, because indirect taxation, manufacturing goods, etc., manufacturers, etc., were quite well conversant with multiplicity of taxes. So,
Right.
service tax industry has to move into it. So, therefore, but with the implementation of GST net, as Gopal Krishna Agarwal has also said, because the most important part in the GST is you want to take the input credit, the transaction should be captured inside the GST net.
Okay.
The person who is not putting any transaction in the GST net, the subsequent user of that product, which is the input product for manufacturers later on, that benefit will not pass to them. So,
all
they
right.
will be forced, the user of any product will be forced to procure from that person who is registered inside the GST net. That is the most important. So, everybody will try to register himself, even
Into
if
the
he is
net.
an exempt. He has to get himself registered in GST net. And how it will benefit the government is that the whole transaction now will be transparent. It will come into GST network, and though the government will know who are trying to avoid tax, and there will be no scope for avoidance of tax.
Okay.
So, you see, after demonetization, why government came for demonetization? They wanted the audit trail and transaction to move through banking channels.
All right.
And cash economy, government objective is to reduce
The
cash economy.
cash, yeah.
So, demonetization, and we saw how beautiful effect that demonetization had. Ki 1 crore new tax payers have been enlisted in demonetization in a short period of 3 months. So, all now transactions will move from the banking channels, audit trail will be there, there will be benefit incentive for putting through the tax network. So, this will create a shift from informal economy to formal
What
economy.
kind of impact or effect do you see in the GDP, and how do you look at those concerns which have been raised around inflation?
GDP, what our country was suffering was that there was no ease of doing business. Manufacturing person had to go for various licenses. He had to go for various octroys, restriction, multiple taxation, multiple assessments, multiple authorities controlling his business, and there was no ease of doing business. With the GST network, GST implementation, there is one nation, one tax. Market one, India has become one India will become one market. A person manufacturing in Goa can sell to Maharashtra or anywhere, and he can get benefit of input credit. One thing is there, then multiple checkpoints like octroi, toll tax, etc. are reduced, so there will be fast movement of goods. And the third important thing is everything is online. Some people are saying that in GST we will have to go for multiple registration, that
That's
there
not
are
the case.
29 states and 8 union territories, everybody will have to get registered himself in 37 registrations for GST. But you see, it is all online. You don't have to go to 37 places and get registered. You sit in your home office, wherever your business establishment is, just online you enter, get
And
registration,
it's a simplified
do transactions. All the GST network can handle 300 crores transaction
Okay.
per month, and all will be matched automatically. So, self-assessment is there, transparency of tax payment is there.
There is no dearth of infrastructure. We have got enough infrastructure in
As
place.
far as Mr. Adhia has categorically said many times, our IT income tax department is the biggest user of IT infrastructure, information technology, the whole computer network, training of the employees, government employees has taken place. Government has said that we are well prepared with the infrastructure, training of the officials. Now awareness creation is going on with, like your channel, like Lok Sabha, and everybody through channels, people are being informed, creating awareness to their people, and even the professionals are doing. Institute of Company Secretary, Institute of Chartered Accountants, all these professional bodies, business associations are regularly creating an awareness campaign,
which is an important
and
aspect of this
because of that
whole
only
exercise.
that more than 75% of tax registered taxpayers earlier have migrated to GST.
Okay. One critical thing, sir, here, Mr. Majumdar, trying to understand as to how the government would pursue this taxing of services part. Can we expect multiple slabs and multiple rates here too?
I would like to have, I would have liked to have 3 rates, but I don't think they will go for 3 to start with. They will go for 2 rates, I think. By afternoon, we will come to know. By
That's
today
true.
afternoon.
Yeah.
One will be the standard rate, other will be 12 rate. There cannot be a separate rate because you see, there is no service tax. Let us understand
Yes.
this, because it's a bundle of services and goods.
That's true.
So the slabs are 4, they have to maintain these 4 slabs. So either they will go for 18%, 12% and 5%, or they will go for, and then there will be, like today we have a negative list, there will be an exempted good. Exempted goods, exempted services means negative list.
Right.
Other than that, everything will be under the
Right, and then there are those demerit goods that you were talking about, which means there's going to be
the
higher
demerit
slabs
goods on the good side.
Right.
But this one, the services also, I would think that they will bring 2 slabs to start with, one 18, the other 12.
Okay.
And it is necessary because otherwise service sector, your GDP 60% is coming from service sector. So you can't kill that service sector also.
For sure.
So they are already concerned about it. But going for 15 to 18%, 3% is quite a bit of thing.
And
so,
you know, I'd like to ask you here, because we have the last 5 minutes left in the program, trying to understand as to, you know, the implementation of the GST. Are there further challenges that you see in the implementation of GST?
Honestly speaking, I have one challenge only I can see.
Okay.
That is my GST net. Because the entire thing is totally dependent on GST. There is no plan B. So I would have liked that before the GST is introduced, at least for 2 months, it should be fully operational, and the business processes which I mentioned, that registration is only the first part, then the payment, then the return filing, and then the matching the returns and matching the invoices, which is very important. These things, I wanted this to be done as a pilot run or dry run or test run, whatever you call it. It is very essential. I believe they will do it, but 1 month, I don't know. The other thing important is that here it is only not the GST net people testing it. It is that if I am a taxpayer, whether I have customized my software to add to the back end of the that thing, so that also has to be tested.
All right.
My confidence will go higher if I can get the test done before it is implemented. Keeping that in mind, I generally would have felt more comfortable if the target was 1st September. But then if it is decided in 1st July, it will be done.
But it shall happen on July 1st. These are the signals that one is getting, Mr.
The
Agarwal?
government has said categorically that 1st July is the deadline by which we want to implement, and I think taxation and this implementation of these kind of, they are continuous process. Even if once they are implemented, there may be some bugs, there may be improvement
more
required,
amendments
there
or
may be
changes.
grievances of the people that will be handled, and accordingly it's a test case. By implementation only you come to know where are the real problems, how that have to be integrated into solutions, how solutions have to be developed. We have a very strong financial markets, even banking sector softwares, our companies are well geared to handle. We have a Finacle, so many Escrom, so many softwares in the banking sector which handle thousands and lakhs of transactions per day. So GST, I think GST net is not very difficult to be implemented as a scope wise, but there may be minor bugs which will be taken care of in the course of time.
Mr. Kedia, the challenges that you see.
What I can see, the problem which we are facing while filing income tax return, in India there is a concept of last date, and there is a huge pressure on the system on the last date of filing of the returns, last date of depositing of the tax.
So true.
And we have seen even in income tax, even in service tax, even the last service tax.
We are all deadline oriented.
Yeah, the server become hang. So they have to extend the date. Even in the last this was 25th of April, the server was dead. They have extended 6 days. So this has to be seen. The Indian mentality has to be kept in mind, because here there is a system of last date and everything will be done on the last date. So system should work as usual, because Indians will come on the last date. You cannot change the mentality.
You cannot change the mentality.
Yeah.
Okay.
So this has to be kept in mind, and there are two things, and I want to support Majumdarji also, because some things has been taken from the service tax, like taxing the advances we are receiving. So that has been taken in the GST also. If you are selling the goods, bill is yet to be raised. If you have received the advance, so you have to pay tax on the advances, on the service tax. Was happening in the service tax. Number two, if you are transferring goods from your own godown, from one state to your own godown, your own branches, you have to pay tax. You will not get input credit. You will get input credit only on the final liquidating the goods from your branches. So I think there were two things which will hamper doing business.
Okay.
So this has to be looked after by the government.
All right. Okay.
Blocking the working capital. That's
Okay.
what exactly. The working capital will get blocked.
Okay.
There's a thing.
Is there something on the compensation of the states? Is that going to be some sort of a hurdle, Mr. Agarwal?
No, I don't think, because government has said that the overall revenue collection will be maintained, and therefore there are multiple slabs the government has said, and this whole just cess component which the central government is taking, government is sharing the GST, IS GST and state GST, interstate GST and center GST are being shared among the
one of the
center.
considerations was this too, that how is the unspent money or unutilized money in the compensation fund also, if there is, how is that going to be spent? So
the government has clarified it,
Okay.
that this cess will be for 5 years only, and that will be for compensating the states.
Right.
So at present some people are crying that there is a high level of cess, that is just for compensating, and once after the compensation is complete, it will be shared between the center and the state in 50% ratio. So I think, and after 5 years this cess will also go.
Okay.
So GST ultimately will curb inflation, will curb corruption, will benefit the poor, or will give ease of doing business for the businessman, and our economy will move from informal to formal.
and is
Therefore,
also
the
supposedly
economy
going to
will
give
grow.
more fiscal autonomy
Yes,
to
and therefore
the states.
Everybody, it is being held by every person.
Okay, okay. Mr. Majumdar, one last line from you. Do we expect, good impact on the GDP too of the GST?
Yeah, of course there will be. There will not only the central GDP, but even the state GDP, which I mentioned, that the states which
That's
don't having industry, there also will go. Employment generation, because manufacture will generate more employment. More employment means more purchasing power.
Okay.
More purchasing power means more consumption.
All right.
Also, definitely GDP will increase.
Fine. So we need to have more, more discussions of this kind in order to understand as to what GST would really mean and what kind of transformation will it really mean, will it really bring in the indirect tax regime in this country. Well, thank you very much, gentlemen, for joining me in this program. Well, that's all for today in Insight. Thanks very much for watching. Goodbye.